following program is a presentation of the Options Insider Radio Network. For more programs, visit www.theoptionsinsider.com or search for Options Insider Radio in iTunes.
And now, it's time for the show that breaks down the options market. From unusual activity alerts to market updates and trading strategies. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the Option Block. With your host, Mark Longo from theoptionsinsider.com and co-hosts Mike Tusaw from KnowYourOptionsInc.com and Mark Sebastian from OptionPit.com. The Option Block is brought to you by Options Express. Don't spend time worrying about your broker. At Options Express, security, stability, and account protection are the most important responsibilities to our customers. Secure account access, enhanced financial protection, entrusted with over $7 billion in customer assets, established financial stability. Options Express lets you trade with confidence. Stocks, options, and futures, all in one account. Trade with a specialist. Visit optionsexpress.com/OXradio to open your free account. Options Express is a member of FINRA, SIPC, and NFA.
Welcome back to the Option Block, and I hope everyone out there is geared up for a fun and indeed a profitable start to the old holiday trading week. My name is Mark Longo from the old OptionsInsider.com, as well as the Options Insider Radio Network, and I am joined today by a who's who of Option Block All-Star panelists, starting off with good old Monday Mike himself, none other than Mr. Mike Cavanaugh from Know Your Options Inc. Monday Mike, welcome back to the show.
Hello, everybody. It's great to be back.
What are the odds we would have you on a Monday yet again? What a strange coincidence.
It's blocked off on the calendar, I'm telling you.
It's like Oprah making the cover of her magazine 400 times in a row. What are the odds of that?
It's in the calendar. It's going to happen.
And we are also joined by the other half of the Option Pit dynamic duo, good old Andrew Giovanazzi of Maine fame and also from OptionPit.com fame. Andrew, welcome back to the program, sir, and thank you for taking a break from all those delicious Maine lobsters.
Thank you. Yeah, I had to put my lobster down. I was actually in Chicago last week eating just pretty much everything I could get my hands on. But
this is a good town for eating.
I supped well. Let's just put it that way. I didn't starve in Chicago.
So Mark didn't get you on the tuna and turkey sub diet the whole time you were here?
No. Actually, Mark cooked one heck of a good Italian meal. Bracioles, meatballs, the whole thing.
The Sebastian home-cooked Italian meal. Wow, that sounds both intriguing and terrifying at the same time.
Yes, he's a good cook. He's a good Italian cook.
He's from the well-known Sebastian clam from a little-known region of central Italy.
Exactly.
Sebastianos.
Exactly. The Sebastianos. Exactly.
And last but not least, a man who has a legitimate vowel in his name. Good old Tim Navabi holding down the Options Express hot seat for this episode. Mr. T-Nav, welcome back to the program, sir.
How you doing, Mark? I'm doing good. Thank you very much for the invite for today's show. Appreciate it. I always enjoy being here.
You got a decent energy level for a man who just went through expiration weekend. How was the big how was the big shindig on Friday?
Friday we were moving at a clip. Definitely. I mean, we had people in the queue, I think, all day long. But today, holiday week, Monday expiration, it just kind of, volume seemed to fall off a cliff all of a sudden.
Sipping on the old holiday eggnog at the desk today?
Yeah, a few of those.
I walked by the OX offices today, and I thought I smelled the faint whiff of eggnog in the air. So I think party time has already begun at your local Schwab outlet. All right, and with the team assembled, we're going to dive right into the trading block.
Trading Block.
And welcome to the Trading Block. This is, of course, the portion of the show where we dive into and parse the interesting trading activity that's moving the screens and capturing our collective interest for today. And it was a relatively mild down day on the street today. S&P closed down about 14 handles, or a little over 1% to 1205. The Dow closed down almost 100 even to 11,766. And the good old NASDAQ down 32 handles to 2523, with the VIX cash creeping to the upside, up 0.63 to 24.92. So let's start there, as we are wont to do. Andrew, we haven't had a nice chance to chat with you about all the fun insanity going on in the land of VIX cash for the past week or two. It's up, it's down, it moves in lockstep with the market, it's doing its own thing. These are the kind of weeks that I'm sure make the guys who market that thing over at the SIBO crazy, because it's not exactly living up to the promise or the hype of these past weeks, you know. And there's been just a preponderance of people weighing in on what exactly is causing this movement. We joked on a few episodes ago of vol views that maybe people were fully insured to the downside. They had been gobbling up all that near-term SPX downside, so they weren't really that concerned about these near-term shocks. They were kind of just playing into their long units. It could have been the entire market collectively waking up to the fact that, hey, we're not moving 2.5% a day. Maybe the VIX is indeed overpriced over here, or the holiday doldrums kicking in, or a combination of all three. I'm curious what your prognostication is, what your prediction is for what exactly is causing all this VIX cash madness lately.
I think mostly, again, it's more of the same as far as the index kind of creeping down as it's catching up to sort of the more realized movements. Look, today you just had up 63 cents. You know, the guys remarked their sheets today. That's no move you had. You had still a pretty good down move, and the VXX again was down. So that on the other side of the handle, that's the with contango and the futures now, and the VIX futures, the VXX will start to decay every day, basically, until that stops happening. And you even have the XIV, the inverse product up 7 cents. So, it's still European bad news. VIX still kind of coming into the fact they're discounting. The only thing that tripped me up a little today was the TLT. The TLT just kind of breaking out, getting close to the highs of the whole crisis again. So, just because I think people are going to run out of places to put they're going to sell their euro whatever and just buy treasuries, because that's the only big time security left like that. But usually, the VIX coming in, we saw the treasuries kind of start to decline a little bit, but treasuries shot up and the VIX was sort of flat today. So you a little funky. That was my funky move of the day. I was surprised because the TLT is making IV30 lows. I thought that would be the one direction where it starts to, give some up, but it's not. So I had a funky signal. I'll just call today a more funky type day, funky signal day.
I think you can call the past week and a half pretty funky from a volatility perspective. We're moving in lockstep. We're not. Yeah, I think it tends to be a combination of all three. Who knows? I think we've hit our new mean for the near term. We're going to be vacillating around this point for at least a little while to come, unless there's some gigantic meltdown to come in Europe or some other shoe to drop that we haven't discussed yet. Of course, speaking of other shoes dropping in the marketplace, on Friday we had the IPO of yet another big, much anticipated tech name. And of course, Monday Mike loves to play in these tech names. It was Zynga, ticker symbol ZNGA, went public at, I believe, $11 on Friday, got as high as 11.5, and then closed immediately at $9 on Friday. And it hasn't exactly fought its way back today, down about 45 cents to $9. Of course, we are, or $9.05, I should say. Of course, we are still too early for the options, but it's just this is probably this is the last edition of the great tech bubble of 2011, where we had LinkedIn, we had Angie's List, we had a few others in there that are escaping my memory at the current moment, and then of course we have Zynga. So Monday Mike, are you putting all of the grannies and retirees in Zynga right now? Is that where the money's going?
No, this is a stock that I can look at and say, I wish it never happened. for how many Facebook updates I've seen on Farmville that somebody just grew a rutabaga in a broccoli and they need some help watering it. I'm in shock that this is actually publicly traded.
I'm kind of amazed, too, and I saw some very grandiose statements from the CEO of Zynga after the IPO saying this was the crowning achievement of his career, and he really wanted to make a company that mattered and was relevant and changed people's lives. And I said to myself, you made essentially a glorified marketing company that was essentially acquiring vast amounts of personal data through the masquerade of a game. And this is your crowning achievement of your career. But it works. He made a great deal of money.
Did his statement end with, and please send me 45 tokens so I can buy a new water bucket?
I think your reaction is kind of par for the course. There are a few companies out there that evoke so much instant negative reaction as Zynga. You mentioned Zynga to anybody, and it's like, oh, they're just a glorified marketing scam. They're just terrible. I mean, they're up there probably with maybe Groupon and a few others as instant reactions one way or the other. I think Facebook probably falls into that camp a little bit as well, as with all the privacy things they've been doing. But yeah, Zynga, definitely an intriguing name, and I'd be curious, very curious, to see the put activity on this one when they do go live. Mr. Tinov, do you have a date for options on our good friend Zynga here?
I don't have any data on that, but normally it's been running, I think no more than, 7 days. I mean, once the stock starts trading. I can't think of one that took a while before there were options trading. Can you?
No, they've all been pretty quick lately. Angie's List and LinkedIn are both pretty quick.
Yeah, usually it's pretty quick.
There's another one I'm forgetting in there that went in between Angie's List.
I think it took about 75 years before GE got options.
But there's another tech name that went public in between.
Pandora?
Was it Pandora? That's the one I'm thinking of. There's another one. Yeah, maybe it's Pandora. But there's such a slew of quote-unquote Web 2.0 names launching.
Wasn't there a Russian one? That Russian one? I don't know. I can't remember that one. Sorry.
Yoku?
In there. No, not Yoku. It was there. I just saw. But I understand you on the list of names here. I just saw that list. Never mind. Ignore me.
Of course, LinkedIn not looking too good on the year, closing well south of it. Actually, north of its IPO price, which I believe was 50, but still well south of its highs. Angie's List also trading about even, I guess. It IPO'd at $18. This actually is down from there. It's about $15.65. So none of these names exactly lighting up the tape post IPO, I think. But there was some. What was the one we came out and there was just juicy Groupon? Was it? Oh, it was Groupon. Wasn't it Groupon?
It was Groupon.
There we go. Yeah. That's the one I'm thinking of. Yes, Groupon, the other big name to come out in the tech name. That's the one that had the juicy conversion reversals lighting up the tape on that one. And of course, if you played in those, it worked out fairly well for a while. Or if you just picked up those juicy puts, as juicy as they were,
you had a 40% drop or something in the stock. What was it, 26 to $14 or something like that?
Exactly, and now it's kind of plateaued again around 22. It closed at 22 even today. So, and it was trading 23 for a while there today. So Groupon is starting to climb back from the abyss that was its post IPO run there for a little bit.
Yeah, I've been keeping an eye on the bar on that just to see how crazy it gets, and it's actually it's come off a bunch from what it was trading before. It's about back up to $1.60 or so, $1.40, something like that. It's nowhere near the $2.50 it was when it made that big move up.
Yeah, it's hard to imagine that with those inflated premium levels on the puts on the downside there for a while that you could indeed lose money on some of those levels. But you could have given that movement if you just came out and hit some of those bids, which I'm sure a lot of people did given the fact that they were so enticing. The fact that you could sell those 15 puts, whatever price they were at that ridiculous premium level and the vol level they were trading right after the IPO and still lose money on that deal is an intriguing prospect given how inflated they were. But yeah, I'm sure a lot of people came in and just saw those and without any regard to risk management or anything else just started nailing bids. And of course, we all know what happens when you do that. It was a intriguing run. But if you had a chance to hold on to it, you did all right in the end of the day, it seems like. But I'm sure a lot of brokers didn't give you that that long window, that long time to run. Andrew, have you been trading, like you said, you've been trading in and out of a lot of video game companies lately?
No, I just was just looking at them. I was paraphrasing the CEO. I was going to, start a new company and this will be the crowning achievement. But, he made a lot of dough. So I would call that a crowning achievement of sorts.
Yeah, I would say definitely. I'm not mocking the crowning achievement. I'm sure that is the biggest thing he's done in his career. But I think the grand eloquent statements of this being a relevant company, changing lives and changing the world and all these things. And yeah, not so much that. but yeah, it did make money. So in that sense, for him and for his venture capitalists, it worked out fairly well. So in that sense, I'm sure he's not too upset about this. And yeah, I think that's going to... Oh, I guess we can quickly hit on the commodities before we close out the old trading block. Tim or Monday Mike, you guys want to dive into the metals or oil or anything along those lines?
Not too much. I mean, there wasn't... The grains were kind of moving today. I mean, corn was up over 17, about $6. Soybean meal 293.50 up 320. What were some of the other movers here? Soybeans themselves up 11.39. Crude oil was up just a little bit, up about 28 cents, 93.81. And let's see here, some of the metals. Again, kind of just quieting down here. 15.95 on the gold, down 2.30 it looks like. So. Yeah, not too much on the commodity front either.
Yeah, it seemed like it settled down later on in the session. Gold and oil were having a bit of a move earlier in the day, and they seem to have settled. And Monday, Mike, you've parsed out all of the metals activity to the St. Charles office, has he?
In a roundabout way. I mean, we keep our eye on it. Compared to last week, the commodities are very calm. I mean, you had gold in a 2-day period break about $150. Crude oil was down about 10. The real news with gold, I mean, it's gone up so long, so far. You could argue it takes the stairs up and the elevator down. But we've gotten a lot of calls in the last 3 days about, is it the bottom in gold? Should we get long here? It's really a tough call. I mean, when commodity markets move, they tend to move very, very quickly. And, I'd hate to be in the position of catching the falling knife here. So we've kind of stalled out the last 2 days in gold. I think, like Tim said, it's the February gold's trading around 1590, 1595. That was up at 1725, 1750 about 6 trading days ago. So a pretty nasty sell-off. And doesn't feel like it's raring to go back up. It might be just catching its breath a little bit here before it makes a second leg down.
Yeah, reminiscent of that big silver apocalypse we had earlier this year where silver just took it on the chin for quite a while. I'm not sure if gold is quite there yet. Is it as dramatic as the SLV or silver sell-off was earlier this year? There still has a little bit ways to go, right, before it catches up.
A little ways to go. Nothing. It seems like in all of my adult trading life, the silver market, when it lets go, it lets go more than any other market I've seen. Harder, faster. You can hear the screams from the margin department when you pick up the phone. I think gold has the capacity to do that. It just, for whatever reason, the silver market, it must just be like every levered trader in the world trades silver, because I've never seen moves in any other market like I've seen in silver. But, that was a pretty nasty move last week in gold. And like I said, I mean, it seems like it's kind of luring you back in here like you want to get long. We had 1660 pegged as a support level, that if it went below there, let's take a step back and watch how it kind of plays out. And it played out fairly quickly, and it belted down another 100 points, and we've kind of found a level here at like 1590. But like I said, I mean, it still feels like it's trying to lure you back in, and the second leg is coming.
That SLV moves so quickly because those Hunt brothers are indeed fickle masters. And once they take the bottom out of that market, everyone just heads for cover, and there's no bids in sight. It's like when those the Mortimer in trading places.
Randolph and Mortimer.
Once they say sell.
Clarence Beeks. What's the report say, Mr. Beeks?
Turn those machines back on. All right, and that is going to do it for the old trading block. And now we're going to roll right into the odd block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the odd block.
And welcome to the Odd Block. This is, of course, the portion of the old program where we discuss the interesting, the unusual, and sometimes the downright dubious options activity that is lighting up our tape today. We're going to kick things off with yet another name in the old railroad sector. I feel like I'm going to bring up Reading Railroad or any of the Pennsylvania, any of the other ones on Monopoly anytime soon, given the quantity of railroad names we've had on the show in the last few months. But this one is NSC, good old Norfolk Southern Corporation. They closed today at $69.19, down about 63 cents, or nearly 1%. On the day, this is the name that does about 3,500 contracts a day. They did nearly 40,000 today. A sizable day from a volume perspective today, with about 27,000 or so of those contracts going up in one massive put spread. We saw someone coming in and hitting some bids on the Jan 65 puts for about 65 cents. Sold those 13,750 times. Then he came around and picked up the 10-handle lower puts, the Jan 55s, for about 15 cents, so he netted it out to 50 cents. Also did that one-to-one, so almost 14,000 of those as well. So a sizable credit put spread going up today here in NSC. If you look at the old chart here of NSC, this name's actually been vacillating quite a while in the 70 and above range for most of the past 3 months or so. It hasn't dipped down into that high 50s, low 60s range until, it's been about really early October. So you had a little bit of a range here after earnings where it's been somewhat elevated given the past. This guy obviously thinking that it's not going to retest that range of early October, at least not anytime soon, and putting on a fairly sizable bet to that end. Stock's got to drop about 22% for this thing really to blow out here. And of course, it's not an earnings play. He will get some earnings pop in the vol here, but it's really earnings are coming out on the 24th, which is a couple of days after these options expire. So he's not putting on an earnings bet here. He's just putting on a naked spec, at least that we see, that looks like NSC is not going much to the south anytime soon. Tim or Monday Mike, any of you guys playing in the railroad sector these days?
I see some orders for railroads quite often. And Norfolk, I have not seen anything that comes to mind, or anything big or anything recent anyways. But quite often we do some people getting in trading the railroads.
Yeah, it seems like lately I've been talking a lot about railroads here on the Odd Block. Maybe it's just my own perspective because we talk about them so infrequently, and now to have several of them pop up in the past few weeks, maybe it just skews my perspective a bit. But nonetheless, we have been diving into and doing reviews of a lot of railroad-based activity. So perhaps the smart money going forward into early 2011 is looking at the railroad sector. I think the Parker Brother boys and the Monopoly folks would be happy to hear that. And then
isn't this a Warren Buffett holding? Doesn't Berkshire hold a good chunk of Norfolk Southern?
It might very well be. This is the name that kind of reeks of Buffett, old world economy, a lot of very fundamental business model you can wrap your head around and see how they make money. There's a lot of machinery and big corporate things around it. The kind of things Buffett likes. Buffett's not going to be a guy investing in Zynga.
Yeah, I think it is a Buffett on the Buffett list. I don't know. Whenever I see one of these put spreads, I always think it's like one of those third-party newsletter writers who, says, I just got back from the Berkshire Hathaway annual meeting, and they were talking about this, and for a $50 subscription to my newsletter, here's the first real treat you're going to get, and it's a bull put spread on Norfolk Southern. I just don't see this as being a great trade. It's short term. Yeah, if you're looking at a stock going up, rather than pounding out 15,000 put spreads, I'd much rather sell far less and come closer to the money and just sell the at-the-money puts on a cash-secured basis. If the stock goes up, great. I don't have to wait an entire month to get 40 cents of a credit put in my pocket. If it goes up and I'm short the at-the-monies, I can get 40 cents fairly quickly.
Yeah, that's true. You need to wait for the decay to kick in on these guys, and it's going to take a while to get that full 50-cent premium on there. So you're saying NSC is not going to be a Wheel of Fun candidate for you?
It might be. It'd be more of a Wheel of Fun candidate than to load up and light up 15,000 put spreads. That's what I'm saying.
And I'm looking here, and according to this website, which I have no idea if it's credible or not, the WarrenBuffettPortfolio.com website, they're saying he closed out his NSC position. So he is no longer a big proponent of this particular railroad, at least. But
Gotcha.
he did like it in the past. So way to be up on your Buffett holdings, sir. I'm very impressed. Is that you crowding my email inbox every day with Warren Buffett just bought this stock? You must want it too.
That's all me.
That's all KYO, baby.
How about buying First Solar? You could have done that too. When they got long First Solar, they bought that. One of those Buffett properties did buy the solar farm in the middle of the desert for $2 billion, and First Solar ripped, and now for some reason then they said, well, that's about the only thing we're going to be able to sell this year. Back down the stock went.
Yeah, solar seems a little bit too edgy for Buffett. I don't know, that doesn't really. I mean, he likes insurance, he likes Coke, he likes railroads, he likes a lot of those kind of things that he could wrap his head around. And not to say that he's simple, just he likes old world companies.
It is energy. It's just new type of, it's the newfangled energy.
Once you get into photons and electrons and away from the old industrial machine, I think it's perhaps a wee bit out of Warren Buffett's portfolio. But who knows? Maybe some of the other portfolio managers there are more up on solar. And then, of course, moving on from good old NSC to a medical device's name. This is St. Jude Medical, ticker symbol STJ, closed today down about at $32.16, down about 80 cents, or roughly 2.5% on the day. And it's the name that does about 1,400 contracts a day. They did nearly 8,000 today, so a comparably sizable day for good old STJ. And what we saw was a 1x2 here, where someone coming in thinking that we're looking at some upside here in STJ. He came in and sold about 3,000, so a pretty sizable trade for STJ. That's really that alone is about 2 times the ADV for this name in that one leg of this trade. He sold 3,000 of the Jan 2013, so these are very long term, 22 half puts for about $1.20. And then he flipped on up to the upside to do half as many of the Jan 2013 40 calls. Picked up 1,500 of those for $2.20 a piece. The whole thing nets out to a credit of 20 cents per contract. And so he's using these puts to finance his upside bet here on good old STJ. And if you look at good old STJ, they haven't exactly been, after earnings they did flirt briefly with the north of 40 level. They hit about a high of about 42 very briefly after earnings in October, and then promptly have pretty much never looked back. They closed today obviously at 32, so 10 handles roughly lower than that. So this guy thinking he's got a decent time horizon on this one. He's got over a year for good old STJ to rally north. Meanwhile, taking a bit of a flyer on the downside that this thing doesn't drop south of 22.5 anytime over the next year, because otherwise he's picking up about 300,000 shares of STJ at that 22.5 range. So an intriguing trade. I know, Mr. Kavanaugh, you boys like the 1x2s here. What do you think of this one?
I'm interested to keep my eye on this one. I mean, it's, I guess, what did you call this, like a reverse collar without the underlying? You're selling the puts to finance the purchase of the calls. I mean, I like that. I don't like that many contracts. I mean, unless you got what would that be, $6 million to put up to purchase the stock. I'd keep my eye on this one. I'd be interested to see if he comes in, if we get a little rally on STJ, to see if he doesn't come in and buy the 20 puts, back at a lower price, try to get them 15, 20 cents cheaper than if he would have done just an outright spread today. I kind of like it. I don't know if I like the size of it, unless it is back to Warren Buffett in a Warren Buffett sized portfolio where $6 million is a 1 to 3% allocation on an individual name. But I'd be curious to see if he does come back in, if the stock rallies, to see if there's any puts bought below that 22.5 strike to kind of hedge off the naked risk to zero, so to speak.
Yeah, I had a similar thought. Of course, this guy, the way he structured it, seems to be pretty price sensitive. But if he can get a good deal on some of that downside, because that is a heck of a lot to leave open on the downside here in case STJ does flirt with that. It's only about 7 handles away from where it's trading right now, so it's not exactly out of the realm of possibility. A little over 20% that those puts could come into the money. So this guy, if he's wise, would probably be looking at an extra leg at some point over the next year to try to lock in and mitigate some of that risk to the downside. But otherwise, not a bad way to finance an upside bet. Of course, it's pretty small for you, I know, Tim, but I know you like to do a little more sizable Navabi size type trades, but 3,000 by 1,500, that's not a bad start, not a bad way to start legging into a position for you.
Well, like I said, I mean, I was thinking anyways, I think this is Bruce Berkowitz trying to get his award back that he won last year for Manager of the Decade. You guys know what I'm talking about at all? Oh.
Did he trade this one, or did he trade STJ?
Yeah, and then he and Mr. Greenlight Capital, I can't think of his name at the moment, they were going back and forth because he was short this and Berkowitz was long. And Bruce Berkowitz was from the fund that he has is FAIRX, and he won I think Manager of the Decade last year. Ended 2010, and then he started off, I think, going long this stock like pretty aggressively. That and Bank of America too. So that was just my little joke. That's all.
I haven't followed the history of STJ.
I used to watch mutual funds and all that type of stuff. But
do you have the trading cards for all the managers at home? Do you play the home game?
Yeah.
I picked up a Berkowitz today. He's worth 2 of your Steve Cohen.
I'll trade you a Gross and a Miller for a Berkowitz.
I can see a little Tim Navabi coming into the Star Card store and picking up some.
Miller exited the business too, I think, right? Yeah.
Trader playing cards.
Do you have
dear.
Do you have a Peter?
Oh,
do you have an
dear.
original mint condition Peter Lynch by any chance lying around? That'd be worth some cash these days.
I've got a Paul
this
Tudor
guy's
Jones
getting
rookie
long at the
card.
bottom. I mean, it's 60 deltas long at the bottom. I don't know. I don't think this is too bad. I've been watching all these other cheapy little drug companies too that are starting to, like Merck and Pfizer and stuff like that are kind of crawling sort of strongly but slowly coming up. So I don't think this is too bad of a trade. This is about a 7 on the savvy scale, the Andrew savvy scale. I like this.
When you're talking cheapy drug stocks in the odd block, you're talking like some 30-cent things. I don't know if Pfizer and Merck fit in our definition of cheapy drug stocks here. We've done some cheapo drug stocks on the odd block.
Like an 8 PE or 8.5 PE or, I don't even know how, just, at multiples that when I started, I think these same companies used to be like a 30 PE, like Pfizer was a 30 PE and all this stuff back at some point. Now I think they just give them away. They're never going to grow again. Just an interesting little tidbit there for the
cheapy drug stocks. Pfizer, I like that. Andrew, you're dating yourself, talking about PE. You mentioned sheets before. You're all these old school things. PE, what is that, sir?
It's just eventually things get cheap. I guess. I don't know. Maybe I'm wrong. About the
PE, spoken like a true Buffett aficionado there. I like it.
Exactly. Where was I on that? No.
Maybe it's you sending me all those emails to buy now. Warren Buffett owns this name. Get it while it's hot. Sell some puts in Goldman like Warren Buffett. All right. And then closing out the old odd block today, we're going to look back at a name we talked about originally way back in the end of October 27th. This is the name Hecla Mining Company, ticker symbol HL. This is the name we said back in the end of October that we saw someone really lighten up the tape, picking up 23,000 of the December 6 calls in this name. And given the fact that this name does about 15,000 or so contracts a day, that was a pretty sizable clip in one trade. They picked them up for about 63 cents, so obviously the stock had a trend well over 6.5 for these guys to break even. And actually, this trade, not too long after it went up, this guy had a chance, if he was savvy, in early November on the 7th or 8th, the stock started trading at $697. He had a chance to get out. I haven't had a chance to parse all of the time and sales back to that day to see if he did have a chance to dump them on the close, but he had one glorious period there on early November in which he had a chance to really make some money on these things. And probably if he either scalped to the upside or he dumped the calls, he had a chance to probably, especially dumping the calls, had a chance to probably come close to doubling his money. Not a huge explosion like he was hoping for, but still enough to close out the position. If he didn't close it out, though, in early November, this thing really never looked back. Got down to 6.5 again pretty quickly, and then bam, right around to there. He actually traded 6.5 again very briefly in mid-December, so he had a couple chances to scratch after that, but never really again, unless he was one of the savvier ones and was scalping his gamma the whole way on the top and the bottom. Then he probably did all right. But nonetheless, the stock closed at $5.51 on Friday, so this massive upside flyer didn't become a blockbuster home run hit, but if he had a couple of chances to either scratch it or make some money on this trade. So if he took those, then he fared well. Otherwise, if he rode him to extinction, then this position went out worthless back last Friday. So an interesting one to watch. And again, we like to highlight some of the activity and see how these guys performed going back and looking at some of our odd block candidates here. And this one could have been a decent trade, or it could have been a scratch, or it could have easily been a loser overall. So one of those three, probably in the mid to higher tier of that. I'll be optimistic and hope this guy scalped his gamma and scratched the trade and did all right. But I'm probably being optimistic there. He probably rode them all the way to zero.
Yeah, if he didn't sell anything above 7, then that would have been a tough one, at least something.
Yeah, that when he had a quick opportunity there, and then once that was done, that was about it. And of course, if he did ride him all the way down to zero, that's about $1.5 million that he just blew on a nice upside lottery ticket here in Hecla. So once again, proving the point that the size money, not exactly, and certainly not always, the smart money. And that is going to close out the old odd block today. And now we're going to roll right into the Express block.
The Express block, brought to you by Options Express. Options Express lets you trade where and when you want for every level of trading. From advanced charting, free daily trading ideas, and free educational resources, Options Express is the online broker for all traders. Best of all, Options Express allows you to trade stocks, options, and futures all in a single account on powerful yet easy-to-use trading platforms, including mobile devices. Visit optionsexpress.com/OXradio for your free account. Options Express is a member of FINRA, SIPC, and NFA.
And welcome to the Express block. This is, of course, the portion of the show where Tim Navabi takes the reins and amazes us with his wit and wisdom from behind the Options Express curtain. Mr. Tinav, what do you have in store for us today?
Well, I have two things. I'll kind of keep them brief here. One of them was from what I was experiencing on Friday. A lot of volume. A lot of people had trades on. People that I haven't talked to in a long time. They always had some sort of DECE option on, or there's some sort of quarterly option going. So now I hear from them, and it was quite a few phone calls on individuals that had vertical spreads, and some people were long the vertical spreads, and some people were short the vertical spreads. And, I was getting, again, a lot of calls on individuals who were, long the spread. Actually, this was kind of leading up to Friday, but who were long the spread. It was deep in the money, and, they were looking to get out of their 10-point deep in the money spread, and, they just wanted out. So, they were asking, what do I put on the order? And I was, trying to tell them, look, you got to wait till expiration to get your full 10 points. Because of time value, essentially you can get out, today, this was sometime last week, maybe for 960, 980, something like that. But, you can't try to get out of your 10 point. You can't put an order in to get out of your 10-point spreads for 10 points. That's like asking somebody to trade $5 for $5. Kind of once I get there with them on that, once I explain it like that, they'll understand. But, it comes up a lot where people will want to try to trade out of their deep in the monies for the full 10 points. They'll say, look, it's deep in the money, whether it's call spread, put spread, whatever. And you don't really get that full reward until expiration. And that's essentially because that's when there is no more time value. So it's just trading for pure intrinsic value, and you get your full 10 points.
Tim, didn't you know that's the brokerage firm holding back their VIG, keeping them from getting their full 10 points on that deep in the money spread? That's actually hilarious that people are still. You think if they put those spreads on a regular basis, they would have some knowledge of how these things tend to pay off around expiration, but apparently no patience and maybe a little bit less understanding still on how the deep in the monies work. And I can understand there being some, if you're new to options or you're not that experienced, and yet that being a confusing prospect. Why isn't a 10-point spread trading for 10 points with a couple of days to go. You know, I could see that being somewhat confusing. There are worse problems to have though than why isn't my deeply profitable spread 100% profitable?
Yeah, and the same thing with there were some people who were on the short side, and essentially, their spread was deep in the money against them. And they were saying, well, what's just going to happen to me at expiration? I'm going to lose my 10 points. And I would say, yes, that's exactly correct, and they would say, well, I want to get out now. And I see an ask there for 10.20. And I'll say, well, let's just slow down here. I mean, kind of what you're seeing here is a natural between the bid asks that it's going to make it appear that, the asking price is 10.20. But I'm not going to take your order to pay 10.20 for something that's only worth $10. And, sometimes I tell them, you can get out for $9.80 right now and maybe save 20 cents. But other than that, you just got to be aware of when you're going to get your maximum reward on those vertical spreads.
A good tip and definitely one to live by here if you're trading quarterly and deep in the money spreads, and definitely want to know when the best time is to close them up. So by all means, call up Tim Navabi over at the Options Express desk, and he will walk you through it personally anytime, day or night. He's quite the charitable fellow over there. Thank you for that, Tim, and that is going to do it for the old Express block, and now we're going to roll right into Around the Block.
Around the Block.
And welcome to Around the Block. This is, of course, a portion of the show where we discuss what's coming up, what we're watching on our own collective trading horizons. And we're going to kick things off here with good old Monday Mike himself. Mr. Kavanaugh, what are you watching on your screens for this abbreviated, or not really abbreviated, but this holiday week going into Christmas? What's catching your attention, sir?
Well, we've started charting the course that what we've got on our radar screen, we're putting out Sunday night on our blog, on our website. So if you look, the Stock Market Outlook, December 18th, the one that George almost had me in a headlock standing up on the desk today was Buffalo Wild Wings. He wrote about it last night. Stock has a pretty good story. We're writing this all on our website now, but I'm just reading right from the website. It's got 732 franchised restaurants in 44 states with plans on opening 95 more. Stock was up over $2 today. Steady earnings growth, and he likes it. Dr. George likes it. So ticker symbol's BWLD. That's what we're looking at.
Does about 1,000 contracts a day. Did nearly 4,000 today. So something's up in good old Buffalo Wild Wings. The nice thing about a name like this is it's immune to the occasional repeat of the Atkins craze, unlike the donut names and everything else.
That's right. The only real problem they'd have is if the boneless wing takes over and they're unable to keep up.
If people lose their affinity for barbecue meats as well, or buffalo wing meats as well as sports, then of course this chain could be in trouble. But other than that, looking pretty intriguing. Anything else? Any other Wheel of Fun candidates catching your eye?
We're still in Arco, the South American spinoff of McDonald's. Not working out entirely fantastic, but we're still in it. We sold the 22.5 puts, got assigned in November, and we're short the Jan 22.5 calls. The stock took a little bit of a beating. It's just below our cost basis right now, but we're hanging in there. Dollar General's hanging in there, and GNC, our other Wheel of Fun candidates, are all hanging in there, making the Wheel of Fun enjoyable, making this trip around the wheel pretty fun.
What fun would the Wheel of Fun be without a little bit of pain along the way? You got to throw a few whammies in there to make it exciting.
Exactly.
All right. In addition to Wheel of Fun candidates, a lot of other fun stuff to watch this week. Of course, it is a holiday week. A lot of people will be cutting out early this week to make their travel arrangements and travel plans. In fact, a lot of people thinking that's why the VIX has started coming off so aggressively, as traders are already taking their ball and going home for the holiday doldrums. So that, of course, will play into any strategies that you're looking at this week. You want to be careful if you're going on the long premium side of the spectrum to not get bitten by the weekend/holiday coming out of the options this week. Of course, given everything that's going on in the Eurozone, I think that might mitigate some of the traditional downside that we would normally see on a week like this. Andrew, what are you watching out there in your as you're seeing vol levels coming in across the board? Are you thinking when are you thinking for when the holiday will come out? Are you thinking maybe it's already starting to come out already?
I do think it's coming out already. But what I was looking at actually some more like March options, even February, just seeing if some of those things are getting some of those names where the implied vol is getting just a little extra cheap, but you still be able to pick up some more activity. I think there are some names that's like I was just looking at a couple of the gaming names. Let's say like a Take-Two where the implied volatility is like sort of bursting through 52-week lows, even 2-year lows. And anytime something gets that cheap, it makes me want to take a look at it. Not that I like the name particularly, but I'm kind of a junkie for cheap premium. So,
and yeah, you're the polar opposite to many of the degenerate premium sellers we have on the show on a regular basis. But yeah, Take-Two is an interesting one, particularly from a cheap vol perspective. If you can pick up some cheap vol out there, chances are it's going to pay off. Take-Two has had quite a rocky road over the past couple of years. They always have crazy announcements. They make some pretty controversial games, which also moves the needle quite a bit out there, and they do some crazy things around their releases that usually tend to move the vol needle quite a bit. So if you can pick up a decent vol, some cheap premium going out to March, like you said, that might not be a bad scoop.
All the news is on like the Zyngas and all these, there's action in other names. It's taking dollars. So sometimes with kind of the old school part of the sector, which I guess it's hard to call Zynga, the same sector that Take-Two's in, but let's just call them kind of electronic type games and, entertainment, electronic entertainment. And sometimes those dollars get diverted away, and it's an opportunity in another part of the sector to take a look at what's cheap and what everybody's forgotten, even though these companies are still around, still in business, still making some dough. And every once in a while you can pick up, what could be a little opportunity there.
Well, we talked about on a recent show last week, talked about Activision Blizzard. That's one of our favorite names. We actually trade them quite a bit. I've been in and out of that name for quite a long time. They've been very range bound for the last couple of years. They've been great candidates for a lot of bullish risk reversals and a lot of other spreads that can take advantage of that nice range bound nature. But we talked about them. I believe it was on the Friday show of last week where we talked about someone coming in and just dumping a bunch of size upside May calls on the 12 and 13 strikes out there. So that's another one if you're interested in listeners.
Yeah,
a decent name. Yeah, they crushed the vol pretty good. So if you're looking at picking up some premium out there, not a bad time to do it. You can pick up a decent vertical, 11-12 vertical for pretty decent premium levels, pretty decent vol levels. You can, of course, legging into that bullish risk reversal, especially that 11-12, will be difficult now given what's going on out there. You're not exactly getting much bang for the buck on that short put side of the equation, but it does make the upside a wee bit cheaper. So a lot of interesting strategies for that one. If you're looking at Take-Two, maybe also keep an eye on Activision. They're, of course, the makers of some of the big names that are out there these days, like the Call of Duties and all these other billion-selling games that are lighting up the tape, and indeed the polar opposite of the Farmville-type game developer of a Zynga. And they're not stealing your identity, at least not anytime soon.
Thankfully, no. They might send you a lot of emails, but they're not stealing your identity.
Yeah. And, of course, if you buy one of their games in the store, you're probably not going to get a lot of spam in your inbox. So unlike a Zynga, where they will sell where you went to high school and everything else.
Right, they'll Zynga you.
Exactly. So two interesting names in the gaming front this week. And, of course, if you are going long premium, like we said, beware of the holiday unless you're doing the Andrew route and rolling out to March, in which case you're probably okay. Not too much holiday premium coming out of the March options this week.
Not a super amount.
Not a super amount. And Mr. Tinov, what's going on? What's catching your eye? What are you talking about on the trading desk for the coming holiday week, sir?
How much eggnog is left? No, I'm kidding. We're just, Friday last week it was pretty big for us. We expect things to kind of slow down, but usually that's when something just will creep around and kind of expect you by surprise. Hit you by surprise. Looks like there's housing starts, building permits tomorrow, third quarter GDP. There is some news on the front. So, we're just kind of keeping our eye on some of those numbers. Some of the other numbers here. Yeah, Michigan sentiment is on Thursday, along with that continuing claims and the third quarter estimate for GDP. So, yeah, those will probably be moving the market in one direction or the other.
All right, Mr. Tinov, thank you for that. A lot of interesting things to mull over as we roll into this holiday trading week. And that is going to do it for the Around the Block segment. That's also going to do it for this episode of the Option Block. I want to thank all of my partners in crime for joining me on the show today, starting off with good old Monday Mike from Know Your Options, Inc. Mr. Kavanaugh, what is up? What is going on over in the land of KYO that may interest and or intrigue our listeners?
Just we're still on the same course, steady Eddie. We had our little holiday party last Friday. It was good to see everybody that could make it. We might have an encore as we severely overbooked on the alcoholic beverage side of our little holiday party. So
you did have quite the array of beverages on offer.
It was something. But yeah, we're looking forward to winding down the year and hopefully having a great 2012 for everybody out there. All of our clients, we'd like to say thank you for 2011, and we're really looking forward to 2012.
All right. Thank you for that, Monday Mike. And same question for you, Mr. Andrew from Option Pit. What is going on in the land of Slinky.com that may interest and or intrigue our listeners?
I think we do have a little holiday schedule. Friday and Monday we're having reduced days in Option Pit, but we have a normal schedule. Next week, most likely will be just pit reports and strategy letter updates. And I think Mark has a couple things on tap, and I'm just trying to get my head around the latest. So we actually had a very good year. So we're just looking to roll out the end of the holiday. We're launching 2 new courses, the Silver and Gold. And the silver course basically is actually, what's funny, you just talked about spreads. And what we do is we address a lot of basic option questions from a beginning trader point of view. So how we learned as floor traders about all the basic techniques for spreading and flies and stuff like that, just getting people used to that stuff and why things are priced like that. And so actually it's already been selling and it's going well. So again, just growing, trying to do the same stuff, but provide more content for everybody. So overall, it's been going very well. No complaints.
Glad to hear it. And it keeps you knee deep in all the delicious Maine lobster that you can eat.
Yes, so far so good. Although living in Maine, lobsters, is cheaper than a cheeseburger. So
yeah, that's true. That's true. They just call them lobsters over there.
Yes.
All right. And Mr. Tina, what is coming up in the land of OX that you want to let our listeners know about?
Options Express, we have some webinars on our site. You can get to those, just by going to the Educate and then Events link. Some of the webinars that I think are worth it. There's one tomorrow evening. It's Trading Platform and Site Tour. I know that a lot of our customers can benefit from that. I do a lot of walkthroughs. I have no problem doing it, but I know sometimes when the customer's ready to trade, they kind of want to know where things are on the site. And on the 21st, there's a webinar, Trading Income Strategies. So again, there's other good webinars there. Just head to Options Express, go to the Educate, and then Events tab.
Good advice, sir. Thank you for that. And for any of the other information we discussed on the show today, including some of the analysis, the unusual activity, as well as a lot more in terms of education, in terms of unusual activity alerts, and of course our very popular breaking news ticker, as well as all of the other programs on the old Options Insider Radio Network, just surf on over to theoptionsinsider.com and have the time of your life. What else can I say about surfing on over to the site? If you haven't seen it by now, then by all means, surf on over and check it out. And that is going to do it for the program. I want to thank all of you out there for downloading and streaming and subscribing to the program and making it such a success. And we'll see you next time right here on the Option Block.
Become a part of the Option Block. Just visit www.theoptionsinsider.com/forum to post a question for the hosts. You can also submit questions to twitter.com/optionblock or leave a voicemail at 312-544-9356. Make it interesting and your question just might make it on the air. The Options Block is property of the Options Insider Incorporated. All rights reserved. preceding program was a presentation of the Options Insider Radio Network. For more programs, visit www.theoptionsinsider.com/radio or search for Options Insider Radio in iTunes.